All right, I am re-recording this. Had some technical issues, mic issues, had some platform issues, all kinds of issues this morning. But there's no issues on the market. Market opened up at 43.20, ran up to over 43.60. It seems like the market has forgot the bad news, and we're focusing on the Powell good news, and we're focusing on the jobs good news. Not jobs for workers, but the jobs numbers are good for the economy. So yeah, we ran up here. Apple is kind of an anomaly on their earnings. They had really good earnings, but they had some bad forecasting. So they're down, which is unusual for a market. Usually, a market like this, then Apple is up huge because that's the go-to. So I was gonna do some Apple spreads. My Amazon spreads also are almost out of the money because of Amazon's ridiculous run. But I noticed today is a free money day. What is a free money day? I don't say that lightly at all. I never say free money. The market is never free. But let's take a look at what I'm talking about. You got the downside here level of 43.20. You got the upside level of 43.60. And this was made in the first hour. 9:30 to 10, actually first half hour. We established the bottom and we established the top. Then we came back in and consolidated around this 43.50, and the market's still deciding what to do. Typically, unless something happens, we're going to fade to the upside throughout the afternoon. After lunch, we may break through this 43.64, but we'll see. So, what am I talking about free money? Well, let's take a look at some spreads. And I've done a video on spreads before, the Iron Condor on SPX, but let's take a look at it. So, I said the 43.20 level was my bottom level. The 43.60 was my top. Okay? But we're trading at 44 or 43.50. So I want to give it so that's a lot of cushion. That's about 30 points to the downside and 30 points to the upside. So I'm right in the middle. Okay? So here's my protective put. So if it blows through the bottom of 43.20, then I have a stop here. And then if it blows through the top at 43.80, then I have a stop here. But before it blows through the bottom here, then this would expire in the money. Or this, not in the money, it expires out of the money, and I would keep all this. Okay? If it blows through the upside, this would expire, and I would keep all this. Okay, so you're only liable for one side of this if it blows through. That's important to remember. So let's save that strategy. Estimated credit is 130, and if you want more credit, what you can do is you can sell more here or whatever the case may be, and I'll show you another a modified trade to this as well. Let's save this strategy, and this is what I talk about free money. Almost a 94% that you get the max profit. There's only 1% chance you get the max loss. It's got to break through the pre-market low for the break-even point, and it's got to break through the pre-market or the intraday high in order for me to lose on the upside. So there's a 95% probability I make money on this trade. It's only a 1 to 0.15. This is not what people are looking for spreads, but like I said, it's free money. You're not going to get 10 times your money, 5 times your money on free money day. So how do I modify this? People say this is $130. I'm putting up, $800. That's not what I want. Okay, fine. Let's modify the spread. Because I'm working on loans and other people's money, then I am very protective. And I don't blow out the profits, and I don't blow out the losses. So let's take a look, and if we dropped our protective put, see that it really increased the credit, and let's drop our protective call, and that makes this a strangle, okay, around the 43.50. We're 30 points below and we're 30 points above, and the losses are unlimited. Okay, there's no stops on this. But check out the percentage. Again, 94% that you'll make $300. And then the loss is infinite, so it's not going to calculate the risk to reward. Now, it's infinite because of the call side, because you have limited upside potential. The SPX is not going to go to the moon. It's not. Okay, it's 500 stocks. It's not going to the moon. So you could put a protective put on or a protective call on this to cap your upside, and then your loss will only be to the downside. The S&P is not going to zero. I can tell you that right now. But look at right here. See your P&L negative 20,000. It wants to, on this spread, it wants to cover you for the max loss. So you can do this if you want, but it's the your P&L, you know, it's gonna look crazy because I don't even know what they would hold on this. I don't even know what your brokerage firm would hold on this because the loss is infinite, and then on the downside, you can lose like, you know, hundreds of thousands of dollars. So this is a crazy trade, but like I said, you can do the free money version that I did, and I can prove that I did it in a previous video because I was having video problems. Let me show you my SPX trade. My SPX trade is right here. So I think we were going to the upside when I did this. So I did the 43.05 and 43.20. So I spread that out a little bit, 44.15, 40 and 4400. And it is currently in the money by 50, or it is currently up by $55. And I think I collected 240. So it's doing pretty good right now. Like I said, if it moves hard to one side, I'll collect on the other side, and hopefully we'll have a reversal and I can get out of both sides of this trade. But that's my free money trade for today.